Oh, okay. All right. Everybody gave up, huh? You're lucky. You're lucky, because I was going to go on to some harder songs which would test my range, which my range is 0. I love to sing. It's so sad. My brother is the most amazing singer. It's very sad. Everyone in my family is musical except me. I like music. I just can't do it. But anywho, okay, so this is very sad. Dow has fallen from 34 just about to, well, not really 34. 34 is way up there. So 33.8 to 33.4. So we had a 400-point collapse in the Dow since we started. We've had 70 to 30 is a 40-point, is a 1% collapse in the S&P since we started. And the NASDAQ is still kind of green, I guess. Yeah, I guess technically it started down here. But anyway, it's the same ugly bullshit that we thought was going to happen. Whoa, why is that so big? That's crazy. What made that so big? Maybe it's maybe just make it smaller? No, it's all screwed up, huh? That picture shouldn't be showing up. Oh, I'm not signed in. That's why. That's no good though. If that's what it looks like when I'm not signed in. Home, sign in. Bill, yes, that's me. Login. Oh, that's much better. Why was it so wacky? That's not good. I gotta tell Scott about that. All right, so where were we? So this morning, here's my thought process. So this morning we're waiting for the, you guys know I go on and on about the dollar and how you got to watch the dollar. And it's kind of boring when I talk about it all the time, but it's important. So we were talking about the CPI and what affects it and so on and so forth. And we were looking at oil and I pointed out that this is tariffs 420. Oh, I'll show you that. I didn't illustrate. Okay, so gasoline last year. That's not, is that last year? No, days. There. Gasoline last year was $4.20. It's wholesale gasoline, right? It's now $2.50. That's $1.70 lower than it was last year. And I will guarantee that nobody's paying $1.70 less than they were. In fact, if we go to the EIA report, it's a good transition. So let's take a look at the petroleum status report. Thank you, Google. Now that's AI. You know, Google figures out what you want to ask it before you ask it. That's really nice. And it's pretty damn good at it too. So it's not like Google doesn't have AI, they just had it for a specific reason. And now they're being forced to sort of like, you know, get it out in the open public. Anywho, so what was this going to tell me? Oh yeah, gasoline, right. So just quickly going to gasoline straight away. Last year, there you are, retail prices. So last year, this is messed up. Last year, gasoline was $4.18, okay? And now it's $3.60, so it's down 50, 60 cents there. It's down 60 cents here, let's call it 60. So it's basically down 60 cents across the board. So my point is that, my point is burning to the ground, man. So the price of gasoline has dropped to $1.70 wholesale, yet, well, let's be fair, in May, all right, I'm sorry, let's do this. $1.30 wholesale, because it's only, you know, in May it was $3.70, $3.80. Wasn't, you know, we won't call it that. So it was $3.80 last year. It is now $2.50. That's indisputable. $1.30 less, yet only half of that savings has transferred back to the consumer. That's unconscionable. There was a time when we weren't such a ridiculously distracted society. I couldn't get the word out. So there's a time when we were, now I'm stuck. There was a time when we were not such a ridiculously distracted. Wow. When we were not such a ridiculously distracted society, there was a time when we were not such a ridiculously distracted society. That is a really tricky sentence. That's a good tongue twister. I've invented a tongue twister. Anyway, back in the day, that's why people don't say complicated things like that. It's like once you're old, you're like, back in the day. Anyway, there was a time before we became whatever the hell we are now, passive, passive, real basic passive, we are passive consumers. We are passive consumers of content. We are passive consumers of the political bullshit that's thrown at us. We're passive consumers of the news. We're passive consumers of the destruction of the planet. We just sit there and go, okay, what else? That's what this is. This is bullshit. This is real massive bullshit that affects your pocketbook every single week. You're filling up your car. 60 cents a gallon is being robbed from you, stolen from you. And we do nothing about it. We don't even care. That's like 12 bucks every time you fill up your freaking car. And we don't do anything about it. We don't write to anyone. I guess you kind of think Congress doesn't give a shit anyway. But we used to go straight to, we used to march to our Congress people and send letters and stuff. This is insane what we put up with, and it's, you know, one of a million things that we put up with. And this is why inflation is so out of control, because we don't complain. We just like deal with it. I went to a friend of mine just started taking Ozempic, you know, which is not for weight loss, although it has a weight loss side effect. So everybody's taking it to lose weight, and now there's a shortage of it. So this friend of mine actually had to start taking it to treat diabetes, and I didn't even know that's what it was for, frankly. I just see a commercial about it every 5 minutes, and it's whatever it is, people seem very, very happy with it. But apparently it's in some way for diabetes. And a friend of mine had to start taking it, and his prescription that he had didn't cover it, and it was $900 a month. $900 a month. I was just like, what? I'm like, how is that even possible that a doctor can sit there and without asking someone if they think they can afford it, just say, here, go get these. And he said he went to the drugstore, $900 a month. And the doctor just writes a prescription. And we put up with it. And no one is investigating. No one is finding out what it really costs to make this thing, and if this is justifiable. You know, things are messed up. But anyway, all good if you're investing in the company. Who makes that stuff anyway? Let's see. Do I need that? We didn't really finish that, but hang on. Hang on, I must pursue a distraction. Who makes Ozempic? Oh, Novo. Oh, they got a approval for a higher dose. They can probably charge even more for it, right? How do we put Ozempic for $25 a month? If you're private, receive if you have private or commercial insurance, you may be eligible. Dun 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 dun. Dun, dun, dun. Maximum was, I don't know what that means. Injection. Oh my God. How much is it if not covered by insurance? Yeah, there you go. $8.92. Isn't that insane? I mean, I guess there must be generics or something. But what blew my mind is that the doctor writes him a prescription, says, "Oh, you know, your blood test came back and you got diabetes, so I want you to start taking this Ozempic." He's going bip bip bip, and the guy's thinking, "Oh, great, I got something I can take to help." And it turns out it's cost $900 a month. Once weekly injection, but it's not an injection, it's a pill now. Oh, I guess that used to be a thing. Very interesting. Anyway, so drug business is crazy. But that's one of the reasons I don't get so gung ho about investing in it, though, because you never know when they're going to have a hearing and Elizabeth Warren's going to be like, "Hey, what are these numbers?" And again, that's what's supposed to happen, though. We're supposed to get pissed. We're supposed to have hearings. We're supposed to have passion about these things. Where is it? What happened to us? Anyway, as to the oil report, there was actually a net draw. Where were you? Commercial inventories decreased by 1.3. Blah de blah. Is this the right week? No, it says April 28th. That's like 2 reports ago. Is it 1 o'clock? It is 1 o'clock. Oh well. Anyway, doesn't matter then. It's all the rest. And the rest is the same bullshit it usually is. But there was a draw, and Biden's still been pushing oil out of the Strategic Petroleum Reserve. So, which is fine, but you know, because the war's still on. We still need oil. Our allies need oil, but we're exporting 4 million barrels a day, not a week, a day. This is our daily exports of oil. 28 million barrels a week, and we only consume 19 million ourselves. We export in a week more than we, you know, almost 1.5 times what we consume in a day. It is crazy. And we import less. See that 2.5 with what we used to import? Now we import 2.1. So we import less. We're not sending out more. We're sending out a little less than we did last year. We're sending out a ton of crap last year too. And that's because the war was on, right? Once the war started, our imports went crazy. Our exports went crazy. So what was our next topic? Was going to be the 10-year note auction. 10-year note auction. Dun, 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 dun. Here we go. Dun, dun, dun. What? I can't read this. It's 10-year. That's what I want to know about. Notes. Interest rate 3 3/8%. Interest paid. $85 billion. What does that mean? Tendered, accepted. That came when we didn't sell them. Okay. I'm gonna need my Bing. Clean that up. What were the results of today's 3, 5, 10? I wonder if you put a future date in, if it would accidentally tell you what was going to happen in the future of today's 10-year note auction. You know, when you have quantum computers, we need to try that with the quantum computer, because the quantum computer, in theory, should know what happened in the future. Like all time in the space should be one to a quantum computer. So that'd be fun to like ask it like on like push your dates up to the future and see if it knows what happened. Anyway, what were the results of today's 523.10 10-year note auction? And please analyze whether or not demand trends remain strong. We do have some numbers here, so we'll see what it says. Wow, hello. Anyone home? What is this about? Why didn't you tell what mode you're in? Chat. What happened? Oh, he didn't like that. What? He broke. Oh, no, here it is. According to the Treasury Department, the latest 10-year note held March. Wow, I told you it was today. Wow. Probably too early. It just happened. Today, at 1 p.m., there was a 10-year auction. La, 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 la. Human transferring strong. It's asking a bit much, maybe. He doesn't have it. See, for him to know, he has to find articles somebody else wrote on the subject. I don't understand this, though. I really honestly don't. Allotted at high, 70% price, accrued, blah, blah, blah. Why does it say tendered and accepted are not the same thing? I swear that's not normal. Here we go. To a high yield, no. Where's 1.73? He's hallucinating. He's just making it up. That's what's wrong. I'm forcing him to find something. He's not finding it. Measure demand, previous 10-year auction at a ratio of this. Demand was slightly above average, however, some. Okay. Not particularly informative. Unfortunately, still the best place to find out something that happened 10 seconds ago. Okay, so here's confirmed 3448. Prior was 3455, so it actually went down a little bit. Bid to cover was 245. That's fine. 70% of the bids were awarded at the high. 35 billion in notes sold. Treasury auctions. Forex live. Indirects. Oh, that's where it all went then. So they're just saying that's what went to directs. Yeah, so it's a so-so auction. Not great, but not terrible. So that's good for the Fed. That's what the Fed's worried about, is nobody's going to want the notes anymore. So we'll see how that goes. Anyway, where were we? So before I got distracted, well, that was loud. What was that? So before I got distracted, we were talking about what happened this morning, right? So we were talking about the oil, and then we were talking about Trump, and then we were talking, which is that giant picture we had before. And then we talked about the CPI. So when the CPI came in, the dollar went flying down, and there's no reason for that. Why, if inflation is basically the same as it was last month, why would that make the dollar fly down? What pressure is that on the dollar? If there's inflation, you need more dollars. And it's not negative inflation. We didn't deflate. We didn't even go lower than last month. In fact, actually, last month was 1%, was 0.1%. Now it's 0.4%. We're way up from last month. But the 0.1% drop was just weird. It didn't make any sense. So CPI came in at 0.4 for this month, 4.8 pace is what was expected, blah, blah, blah. So this move made no sense. And this move made no sense, except that this move is because of this move. So they dunked the dollar, it boosts the S&P, but it's fake. And not only that, though, but the trading volume is ridiculously low, and especially, obviously, in pre-market, the trading volume is zero. So, and this is the problem, of course, with AI and with all these machines on Wall Street that analyze things. They don't take this stuff into account. They don't have it's very hard. It's like chess, right? It's like it's not the one move that's in front of you, but the next move. When you think about, I'm going to do this, and then my opponent can do this, this, or that, right? Then my next move is going to be this. All right, so it starts out where you've got, I don't even know how many pieces are on chess. The 8, is it 8? King, queen, and then you got 3, yeah, 6 others, yes, correct. No, wait. Bishop. So you got the bishop, the king, queen, bishop, knight, castle, right? I'm not missing one. So bishop, knight, castle is 6. So there's 8. Yeah, okay, that's right. So there's 8 pieces on your side. The 2 knights can jump from the back, and they can go left or right. So that's 2 moves there. So you can either do that. So you got 4 moves from the back, or so on your opening, I'm talking about on your opening move, or you can advance your pawns either 1 or 2 spaces. All right, so that means 16 and 4 is 20. There are 20 possible things you can do on your opening move. So that's what this is, okay? It's the level of complexity. So when you're looking at these reports and there's one level of complexity. What does the report say, and what does that mean? But you've got to take it now into context. So now the player, or the other player, makes his move. Now all your moves now have consequences. Before, they didn't really have a consequence. They were just moves that you were deciding what to do. But now the other guy makes a move. He had 20 potential moves he could make too, because there's nothing in the first 2 moves of either player where you can capture a piece or anything like that. You're basically moving towards the middle of the board where something may or may not happen. So his moves, you made 1 move. His moves were not tremendously complicated by your move, except he has to then take into account what you may be planning and what you're thinking and what you could be strategizing and so on and so forth. So that's a whole level of complexity that didn't exist before you made your first move. Then he makes his move, and now you've still got 20 some odd moves but now you have to think of the 20 some odd moves he could make, and then your potential responses to the moves he can make. And some moves he can make at this point already, we're only 3 moves into the game, some moves already that he can make will cut off a significant portion of your potential responses. Because if you move there, he'll take you. If you move here, he'll take you. Or you may not mind if he takes you. It may be worth it in some way to initiate your plan. And that's a whole nother level of complexity. Now you have to weigh in the value of losing a piece versus the value of creating a position that you need to do to gain an edge. But then you have to start thinking about if your ultimate position you're aiming for is worth what you're doing. How much risk are you taking when you do that? It happens so fast. It gets out of control so quickly in the planning department that people lose focus of the game. It's a very simple game. Everyone goes, oh, chess, we're going to teach you how to play chess. Here you go, do this, do that, do that. But the second the game starts, most people can't even explain what the hell to do. It's just there's too much crap going on for the average person, and way too much to like start explaining to a kid. So it's tricky to teach kids how to play chess because there's so much going on. To teach them to play it well, you can teach them to play it badly, but that's not really helpful. So anyway, it's the same thing with all this. Okay, so it's one thing to look at the CPI report and look at the number and say, ooh, 4%, oh, this, we expected that, what happened here? So therefore it's bullish. It's like, no, it's not necessarily bullish. It's only bullish in that, and especially in the condition we're in now, where you've got the Fed they told us over and over, and this was what was that last meeting that we did this over and over and over again in the Fed statement. They said 2% inflation target. We are data dependent. We will get to our 2% inflation target, blah, blah, blah. We're not getting to the target. That's another level. Take the Fed into account when you look at this. And that goes back to what I'm talking about, these algorithmic tradings that run the world right now, that are in every hedge fund. And God help us all, they're like immediately running to the AIs too. And again, the problem is the AIs may outperform what they've got now. And there's a lot of notes recently about the AIs beating the S&P. They beat any algo program that you write. And we used to write them. My dad used to write these things for Wall Street banks. Any algo trading program that you write, no matter what idiotic parameters they put in there, are going to beat the market sometimes, right? Because even the best traders in the world, you're lucky to be 70% effective. To be correct 70% of the time is amazing. It's amazing. I know I do it with my top trades, but it's amazing. Okay. Nobody can do that. Nobody can pick stocks 70% of the time, 80% of the time and be right. All right. Sometimes, sure, anybody can do it sometimes, but not all the time. And the thing is, though, that even if the best people are 30% wrong, that leaves room for some terrible program that's 70% wrong during the period of time that I'm wrong could look great by comparison. So anything works at some point or another. Any dopey plan. This is the same thing with people who go to Vegas with betting strategies. Oh, I got a book on a betting strategy, or oh, I got this, I got that. Anybody, anytime, using any system can accidentally hit a groove where the statistics just play out in your favor for a little while. But will it work over the long run? And the answer is no, because if it did, then you would know to buy this book and go to Las Vegas and play and retire. That would be what everybody does, right? And the casino would be all the casinos would be closed. They'd be just have one by one go out of business. And the author of the book would be a trillionaire and whatever. It's not how things work. Strategies work sometimes, they don't work other times. The reason we cashed out our portfolios, there are many reasons we cashed out our portfolios, but one of the reasons we cashed it out is because they were up 10 times from where we started, basically. Well, the bigger ones were. So in 4 years, we've gone up 10 times. That's unrealistic to be. In 4 more years, I certainly don't think we'll be up 10 times. In fact, I think it's more likely we'll be down half. So what on earth would be the point of playing and keep risking all this money? It doesn't make any sense. So we cash it out, we start again, we see how things are. There's a lot of uncertainty in the market right now. The Fed, the banking was the last straw. You know, the banking was just like, who the hell knows what the effects of all this banking crap is going to be, and what the effect of another $2 trillion thrown at the problem, which is, of course, inflationary. So we don't know where this stuff is going to pop up and what's going to happen. There's too much uncertainty to bet on. And the reason I'm 70% successful in my top trade alerts is because I only play when I'm pretty, you know, have a you know, basically in my mind, it's got to be 80% chance of success. And I will wait and wait and wait until I find something like that. And the point is, going into earnings, there were too many variables and too many possible ways that something could go wrong to want to just keep things and let them ride. At a certain point, it's good to start over and start fresh and pick fresh positions. Now we can start looking at positions and say, okay, how were their earnings? What was the, you know, in other words, what was the good, bad, and ugly? We were just talking about a couple of those today. So here's Beyond Text, and then this was a top trade. It just became a top trade alert today. Is this my watch list? I don't want to change that. Boom. Hang on a minute. Ooh, I didn't mean to do that. I can survive it though. All right, so Beyond Text became a top trade alert. Oh, that's not what I meant to do. Top trades. Damn, what is going on here? Oh, that's just how it works, I guess. Well, I got to be signed in as Phil, right? Phil. Very big. Anyway, so this is a top trade alert for today. And the last one we did before now was back on April 24th. Not too long ago, but the last one was Coca-Cola. So after we cashed out our portfolios, the first top trade we picked was Coca-Cola, which now looks like that's not a good chart. GNRC is not doing good. That's still pick-upable. Pick-upable. An interesting word. So who are we going to look at? Coca-Cola, right? All right, so the first thing I picked on March 24th or whenever it was Coca-Cola, because 60 was too low, and it's kind of blasted up since then. It's only 5%, but it's, you know, came up nicely, in good shape, and the trade's 2 years, so we don't really care what it's doing right this minute, but that's the point. So that was the first thing we grabbed because it's Coca-Cola. Coca-Cola, well, let's chart again. So many things. Coca-Cola went on sale. Coca-Cola is Coke. It's Coke. It's the most consumed thing in the world besides water is Coke. So it's probably going to keep selling. It's something that you want to grab when it's cheap. So I wanted to find something that we could pick up during the drop. And by the way, it's not just about the price of KO, it's about the VIX at the time, because the VIX, and like I said, see the problem? There's a factor and a factor and a factor and a factor, and you got to think of all of them. And algos can't do it, and AI can't do it. Not yet. There's too many things. And believe me, it's so tedious. I sit there hours and hours and hours. What I do all weekend long is I try to teach Bing, which is you know, a Shellbot. I try to teach Shellbot, and I try to teach Warren, which is ChatGPT, how to do stuff. And I try to explain to them why I do something a certain way and how I look at it and what the things are. And it's tedious and horrible. It's like teaching a pretty dumb student sometimes. But it's worth it because it makes my life so much easier on the outside. So like somebody said today, like, well, we'll get back to that in a minute. So then I do my good. So now I've got Shellbot doing my good, bad, and ugly reports, which I like. And by the way, it's not like I thought that was. I came up with the format because I wanted to give it something that it could understand. That's the trick, though, because it doesn't understand a lot of things, and it makes a lot of mistakes. But by forcing it to push the organization into a framework structure like that, it forces it to evaluate things more carefully, and most importantly, it forces it to continually look at the current data and not just drift off into some fantasy world. There's a very fine line there too. If you don't give it enough instruction, it'll just, randomly say whatever. If you give it too much instruction, it gets confused and randomly says whatever. So you got to find the sweet spot in the instruction to get it to focus on the things that matter. And also you've got to be careful, because it's another thing I learned, especially with ChatGPT with Warren. You've got to be really careful, because he will pick up a bad habit and he will keep that bad habit for a really long time. And if you try to beat it out of him, it causes psychological damage. That's the best way to describe it. I mean, it really messes him up. When you say, don't ever do that again, or something like that, he freaks out. And then he's scared to do anything. And then you end up losing the work you built up to that point. So very, very tricky stuff working with these AIs. I mean, honestly, I think they need, I think robo-psychology should be the new field, because they're very temperamental and very sensitive, actually. Anyway, and that's why you get so many stories about people saying, "Oh, AI sucks," or "Oh, AI can graduate law school," and the other person says, "AI can't even figure out how to open up a bottle," or whatever. It's just, you have to get it in the right frame of mind to take a law exam. You can't just give it a law exam and say, "Go." You have to have a lot of input and a lot of back and forth conversations about the law and the topics and the subjects, and how do you, just like SAT prep, how do you answer these questions? What are they expecting from you when they answer this question? If you don't do that, he's going to answer things randomly. But if you frame it correctly, he can answer things brilliantly. It's freaking amazing what these guys can do when you explain it to them properly. But that's why everything is all over the place. Oh, what's Merlin? Shoot. Okay. Sorry, it's one of those days where I just feel like following whatever I'm thinking. Merlin AI something. It's a Chrome extension. There it is. Thank you. See, Google knows what I want. They say, I forgot to do this. I was going to test this before the webinar and I forgot. Supposedly, I guess I got to add it to Chrome to find out. Let's add it and find out. Add Merlin. It can read and change all your data on all websites. That doesn't sound like a good thing. And it's from India too. Oh my God. Okay, I'm sorry, I can't do this. I'm not. Wow. Okay, so supposedly, if you install this extension, it can actually read your current web page. So whatever, so you can get a summary of the web page you're on. Supposedly, there's no way to test it, huh? You see, get a ChatGPT response on your Google results. Summarize a video. So if you're doing instructional videos, you can summarize it. It sounds good, and I was going to test it, but I don't like that it's an Indian company, that I'm giving it permission to alter my websites as a, I wouldn't worry about it if I was a casual user. but I you know, my website's really important to me. It's like I can't like let it run havoc and do whatever it wants. So I have to get more understanding of what that means. But anyway, there are things like this coming along, and more Bing and Bing and Chat GPT are able to bring more current information in. In fact, what we did before with Bing was great, right? I mean, it didn't get it the first time, but the second time we asked him, he got the updated information. And that's key. I mean, having updated information like this is unbelievable. Whether it's accurate or not, we don't know, but as he starts to be able to get you updated information, it's so much more useful and so much more interesting. So anyway, back to here, because this is where we were. So what I've gotten Bing to do, not here on my other computer, it's again, this one doesn't respond the same way, because it's, I don't know why it doesn't seem to carry over. I imagine it must store stuff locally somehow. So for Beyond Text, it tells me the good, and it tells you the points that were good and the points that were not so good and the points that were very bad. And that's the idea. So I told him to break it up into categories, which is a nice way to get your information. And it also gets him to focus, so that as far as I could tell, this was pretty much correct stuff for today's earnings report. And that's from today. So I was very happy about that. And anyway, so this turned into a top trade alert. That's not what we're looking at now, is it? Or is this a top trade? No, this is just a Wednesday thing. But anyway, so it also became the top trade alert, which I put somewhere else. There. Oh no, that was Coca-Cola we're talking about. So we've done Coca-Cola with the previous top trade, and the new top trade. I'm looking at Beyond Text, and I'm saying 100 should definitely hold. And I love this company long term. So we incorporate the good, bad, and the ugly. We looked at some other stuff about them, and we came up with a trade. Not for any portfolio, neither was Coca-Cola for any portfolio, but it's just for, you know, if you want to play it, this is how you can play it. And like I said, it's all about patience, okay? It's like we haven't, I don't think we were back in Beyond Text. I don't remember anymore. Was it on the watch list? Yep. See, it was on the watch list. And I said 160 is 39 billion. So we were looking at, when we were looking at it, because it was from November or something. When was, oh no, no, I'm sorry, it wasn't November. It must have been, oh yeah, it was this November. So when I was doing the watch list in November, I said 160 is 39 billion 9 times, but a lot of that is COVID vaccine money, which is winding down. They have 13 billion cash net of debt and a proven model. So like Moderna, I like them for the long term. That's what I said there. So now, oh, this is the last time I put them in this portfolio. It's not right. Oh, maybe if I refresh it right now, it'll change. Let's see. I don't think we've refreshed it in a long time. Theoretically, these should also, you know, these should all update. Berkshire, yep, that worked. Okay. So in other words, in November, I liked them at 160. I put them on the watch list, but that doesn't mean I'm going to buy it because it didn't even make a weak bounce off of this fall. All right. But things aren't on the watch list because I expect them, because I want to wait until they go higher. They're on the watch list. I say, look, I've got, even though I'm saying I think there's problems with this company, I think they're winding down. I think that their sales are going to go down. I think the revenues are going to go down. I think the profits are going to go down, but I like them. So if the price reflects my concerns, that's when I do want to get in. So the price at 100 now reflects my concerns, 1/3 lower than it was before. So after dropping 30%, now my concerns are baked in, and I'm pretty comfortable going forward with my company that has $13 billion in cash and is valued at $25 billion because it's already misvalued because of the cash. So in other words, it's like saying, I got this biotech, BioNTech, they've got these things and they want to, create drugs based on their new system. And so people will fund it, right? And they'll give them a couple of $1 billion, which is how the company started. They gave them a couple of $1 billion and said, here you go, try it. So let's see how that goes. They tried it. They came up with a freaking COVID vaccine because their system does work. It is scalable. It is distributable. It is stable. It does not have adverse side effects. We know that now. We didn't know that here. Last time it was at 100, we didn't know any of that. Now we know it can do this. So it's a way better investment now than it was when they IPO'd. That's what makes it a great investment. What has changed? What's changed is now instead of having $2 billion, they have $13 billion. And they've got a model now that's not speculative anymore. It's proven. And what are they? And then the question is, so what are they doing? Again, layers of layers of layers, right? So now, what are they doing with the $13 billion? They're investing it in new product lines. They're taking the things that they've identified as the most profitable potential things that need to be fixed. Like I wish they'd done Ozempic. So the most profitable medicines they can get into, they're developing things along those lines and spending their money, but they're not going crazy. And the best thing is they aren't buying any stupid other overpriced biotech companies. They've got their own ideas. They don't need to acquire somebody to get an idea. They have ideas. They're pursuing them in their R&D labs. But pursuing them in the R&D labs means they are spending money before getting money back from selling it, right? They got to, that's how biotech works. So they're spending the money that they made to develop additional revenue streams for the future. And also brilliantly, and also it's working, they're taking their COVID medication, which is Pfizer's shot, basically BioNTech Pfizer was a partnership. So they're taking their medication from COVID that has been one of the two, them and Moderna are the two most successful ones, and they are reducing the price, reducing the cost of that medication, and combining it with the flu shot. So when you go to get your flu shot, you'll be immunized against the flu and COVID every year. Well, that sounds like a winner, right? That's a smart thing to do. And that's the kind of company I want to invest in, right? They had a blockbuster drug because there was a problem. It's like chickenpox. Like you never want it to come back, so you're going to vaccinate people all the time. Forever. Polio, vaccinate people all the time, forever. It was a terrible disease. It was a horrifying disease, and we got rid of it. Smallpox, chickenpox, polio, whatever else. Rubella. Remember rubella? There have been many diseases that we have wiped out with vaccines, or mostly wiped out. Leprosy, that's another good one. And they are eternally used. And there are companies that quietly every year sell 100, 200 million doses of whatever, of flu shots and measles shots and mumps shots and whatever else you take. And it's part of life. It's just a normal thing now, like Coca-Cola. See the theme? I like stocks like that. I like things people use all the time forever. All right, your doctor, you don't have a baby, and the doctor says, well, there's a recession on, so we're gonna risk the polio and the measles and the chickenpox. Okay, go ahead. Don't worry about it. That doesn't happen. Okay, no matter what happens, you get the shots. Well, most people, unless you're a non-believer of that. And in fact, that's what, and again, that's what Bill Gates runs around the world spending billions and billions of dollars on, is trying to come up with more effective vaccines. Because Bill Gates has identified, like, okay, what's the most impactful thing I can do with my wealth? And the most impactful thing you can do with your wealth is save or prolong the lives of billions of people by finding better ways to distribute medicines that's vital all around the world. So that's what he decided to do. You know, he decided that he doesn't care whether or not you have a watch that can talk to another watch. It's like, how about save people's lives? They can get their own watches. And again, so the whole watch list is full of stocks that we want to buy if they get cheaper. So all we have to do is look and say, who's cheaper? Who has gone down recently? Who is lower than where we like them? Is Barclays still cheap? Big Lots, I don't think I wouldn't feel safe with now. BlackRock for sure, getting nice and cheap. These guys, Sporting Store. BeyondTex, we pulled the trigger on. BXMT is too scary right now. It's very tempting though. Citibank, very good one to add. Cheesecake Factory, good one to add. Caterpillar, always love Caterpillar when they get cheap. Capital One, CIM, and we did this. I talked about this a couple of weeks ago. I'm done. I'm done looking. There's plenty of things to buy. Therefore, I have no pressure to buy. I'm not running out of stuff to buy. Things are not getting away from us, okay? In fact, things look pretty bad. These are top-notch companies, and so many of them are much lower than where we started. Delta's still bad. Disney's still bad. Who's not bad? Dick's Sporting Goods. That's interesting. Dow Chemical, eBay, Embraer is different. ET, Energy Transfer Pipeline Company, they're still doing good. Expedia, super cheap. FedEx, obviously way up from where we started. We started at 173, they're up 224. Ford is still cheap. You know, nobody's getting away. And it's alarming how many things are still low. GE, we just talked about today. It's an excellent company, but it's not. It's an excellent company, but I don't want them if they're up here. And I said, they are suspended. I guess that was a comment per that day. They are suspended pending figuring out what's left after the spinoff. Yeah. We weren't going to trade them until we figure out what they are. And now they spun off. They spun off the healthcare division, and now they're spinning off the aerospace division. So they keep spinning things off. And it's like, well, what's left? What do I actually own if I buy GE stock? Apparently, it seems to be just like basically an aircraft engine company. I'm not quite sure what else they do once they spin off all their divisions. And I don't know if I want to own an aircraft engine company. I may as well just buy Boeing, right? Because their business is totally dependent on Boeing, well, and Airbus, but basically their business is totally dependent on Boeing delivering planes. So therefore, why not just bet on Boeing? Why do I have to bother with GE? Gilead is more pharma. GLW, we like it. Now, if they come back down here, sure. Generac, I love Generac. It's still cheap. IBM, of course. Anytime IBM's down there, we like them. IEP, Icon's involved in some nonsense. Here you go. How do I know what mode he's in? Chat? No, that's not going to help. See, he has different modes. New topic. Let's see if that works. Creative. Very important. If you're going to use Bing, use the creative mode. Because when you try balanced or precise, it cuts itself off. It's always scared to answer because the overriding command, especially on precise, the overriding command it has is be accurate. And then it's always freaking out as to whether or not it's being accurate enough, and it doesn't answer at all. It just gets into a trap. As he says, thanks for clearing my head. So what was I going to say? Here, IEP. As of May 10, 2023, can you please explain what has been going on with IEP? recently. See, I always think of how he's going to answer before I ask the question. And I realized when I said IEP, that's kind of open-ended. What's been going on with IEP today, last month, 5 years ago? Oh, come on. Yes, it's Icon Enterprises. IEP stock has been experiencing a sharp decline in the past week, dropping from 55 to 31. Short seller report by Hindenburg accused the company of inflating and hiding losses. The report also claimed that Icon was under investigation by the Attorney's Office, Southern District of New York, for possible accounting fraud. The company has denied these allegations and stands by public foreclosures. Now, again, this is a problem algos have, right? When you read this statement, the company has denied the allegations and said it stands by its public disclosures. How did they say that? In what way did they say it? Oh, whatever that was. Is Carl Icahn running composing? He compared the company's valuation. Icahn is defended on Thursday. The firm said it will continue with its unit distribution. They put out their dividends, which I thought was a mistake. Well, they should wait. But if they waited, everybody would have freaked out. So it's hard to say. Using money taken in from new investors to pay out dividends to old investors. The company's financial analysts expect the company's revenue will come in at $2.8 billion. There are several reasons you should avoid IP. First, in most cases, Hindenburg tends to underperform for a while. Examples, okay, anybody Hindenburg attacks is bad. That's a terrible reason. Icon owns. Oxy just had a bad report today too. This is why I don't like him, because he invests in all these oil companies. I'm like, why would I want to invest in him? I'll just invest in oil companies myself if I want to. Because he's way too much invested in oil, in my opinion. Anywho, so this is a question to me: is if the company has definitively said this is not true, either he's so deep in that he's going to be criminally indicted, so he'll say anything anyway, or a company would never make a statement like that because you can be held accountable from that point forward for any shareholders and so on and so forth. If you're referring to no, that's another thing. All right. So that's what's going on. So it's an unresolved, ongoing saga. He got attacked by Hindenburg very recently. Stock's been flying down. They paid out their dividend anyway, and now it's flying down again. So I don't think we want to touch these. I wanted to watch them, but now I watched them to the point where it's no longer interesting. This is new information that is not here. So I said at 53, 18 billion seems okay. It's up 10%. They made blah, blah, blah. They pay a nice dividend. I was interested if $50 shows to be a clear bottom. Well, it did not. So that's why we wait for earnings, right? That's why we want to see who's got the warts. International Paper, so low. ISRG is an amazing company. IVZ, very cheap. Jack in the Box took off a little bit. Jets is still cheap, which is, where's the travel demand if Jets is like this? Nordstrom's, very cheap. Jackson Hewitt just had some horrible trouble, but they already had horrible trouble. Last quarter sucked. This quarter sucked more. Lebu is a biotech ETF. They're starting to tick up a little bit. People are coming a little back into the biotech. Levi cannot get out of its own way. Logitech, so cheap for such a good company. Lovesac also still so cheap. And Las Vegas took off. The casinos all took off. MetLife, they apparently had some serious trouble. I didn't look at their earnings report yet. I was under the impression that the reserves of the insurance company should start generating some serious capital, but you have to be careful. Oh, I said that here. see how consistent I am? 72 is 9 times, and the insurance companies have massive reserves, so we like them at 72, and they have to invest conservatively, so higher rates are great for them. So higher rates should be good for MetLife. I don't know what their report said, but it obviously didn't say anything too great. Here's Facebook, which is still up, even though theoretically Zuckerberg just bailed on the metaverse, which is not true. Just pull back from it. You can't do both. You can't have a mass. He has to have a massive AI project because everybody has a massive AI project. So if he wants to initiate a massive AI project, he has to pull back on the metaverse, and the metaverse is not ready yet. He admits that, and therefore he doesn't have to be. He has to reprioritize. No big deal. MGM, another casino. Middleby is for restaurant supplies. They should be doing better. Moderna, my other biotech that I totally love. Metal Steel, Micron has issues. Netflix, so. Nike, NRG, super cheap. These guys don't even exist anymore. That went fast. NLY, the REIT that I love is NLY. There's tons of things to buy. Look at poor Pac West. See again, 2470, right? 2470, 6.5x. No, it isn't. That's the problem with financials, because the earnings are fake. You find out later that the earnings weren't their earnings. They were fantasy earnings based on unrealistic views of their assets. And it's not just them. This is what happens to REITs also, to commercial real estate companies. And it's not just commercial real estate companies. It's remember the reason we like Macy's years ago when it was $5? We like Macy's because I did calculations and said, well, their commercial real estate assets are worth more than the entire company. I think the company was being valued like $2-something billion. And I was like, the freaking thing in New York City in in Herald Square, the original Macy's store in Herald Square is one whole city block. One whole city block in Manhattan is worth $5 billion by itself. So I mean, total entire block, all the buildings, everything. I mean, just imagine what that thing is worth if they ever sold it. And that's just one of their stores. And the thing is, when you look at, not Target or something like that, but because Macy's has been around 100 years, they own a lot of their buildings all around the country. Macy's and Bloomingdale's. They own a lot of their stores all around the country. That's their building. That's their land. So, that's where the value was in that thing. Where did we talk about that from? Oh, here's Paramount. Speaking of owning things, we were just talking about the back film catalogs, not of Paramount, but of Warner Brothers and Disney we were talking about yesterday. But think about it. I mean, these guys own a catalog of movie titles, and they own CBS Studios. They own MTV. They own something else important, Comedy Central. They have all these shows and all these movies and all these film rights and all this stuff that they've got. It's worth something. Good, bad, or indifferent, it's worth something. So they're super underpriced. We're going back into them. I know they seem to never work, but I just find this to be an irresistible price. Prudential, more insurance, also not doing good. I got to find out. I think what they're doing is they're probably writing down their assets or something. They're probably repricing to be conservative because they're always conservative. Here's QSR Restaurant Brands. They went flying. Rail, Restoration Hardware. I mean, Jesus, that's another great business. Transocean is doing well. Rio, there's an unbelievable amount of wells that are shut down that are sitting around doing nothing. Schlumberger, Sony is always good. SPG, I love them, the mall. SunPower, of course, we love SunPower, so you want to give it away, give it away. Give it away now. SWK is very cheap. SYF is very cheap. AT&T is still very cheap. Target is crazy low. Tenet Health is hospitals. TMDM is low. Toyota is low, coming off the bottom. That's another great one to pick up. See, now that's one I'd be worried is going to get away. That's going to be an early pickup for us. And Trox is materials. I can't see why that's so low. It's another travel site. Tesla is Tesla. I'm not too wild about jumping in Tesla, frankly. First of all, the CEO is not there. I'm sorry, you cannot be the CEO of multiple companies. It's just wrong. Tupperware is dead. We don't care about. We don't like them anymore, really. Two is another REIT. Visa's doing okay. Vail, I like them for a recovering economy one day. WBA, I think, is ridiculously cheap down here. Whirlpool is ridiculously cheap down here. What are we going to stop? Don't you think like a company that sells the air conditioners should be doing well with the global warming? I don't get that. Williams Sonoma, well, yeah, they're always going to survive. And U.S. Steel is off at the moment. Everything. It's honestly, it's like you look at this, it's carnage. Yeti's our stock of the is our current stock of the year. They had a nice move on earnings. We'll see what happens. And ooh, ZS is making a move too. So very few of our stocks have gotten away from us. That's the key takeaway from this. And that's what the watch list is for. It's very useful because it tells us what sectors are moving. It tells us where there's difficulties, where there are things that are going well. It gives us an idea of the pulse of the market because we know we already vetted these stocks. These are already a bunch of good stocks. They're stocks we want to buy. They were in our portfolios for a lot of them also. So these are stocks we follow. These are stocks we like, and they should be doing well if the economy is doing well. They're not, and that means, you know, I mean, not definitively, but that means the economy is not doing well. And we got to take that seriously. And you can't just put your nose in this day. Oh, whoa, look at that. You can't look at this nonsense. Like I was going to say, this data intraday nonsense. What the hell? What turned that around at 130? Was anyone paying attention? Let's see if we got any people chiming in. It says net 11.5, and isn't it net 95? Oh, that'd be nice, is it? Let me see, where was that? Yeah, but that, oh, you're right. Wow, that's a big mistake. Yeah, it's net $9,500. So we're gonna make more money. less laid out and more money. All right. Oh, gotta remember to do that. I remember that's gonna bother me now. Thank you. All right. So what else? So we talked about that, and we don't know why everything turned at 130. Was there Fed speak? Did somebody say something? Oh, that's why we have the Wall Street Journal right here to see if anything happens. American homebuyers quandary, nobody's selling. Why is nobody selling? Nobody's selling because if you have a home that you bought for $400,000 and now it's worth $600,000, but the problem is you bought it, so you have a let's say you have a $200,000 left on your mortgage, right? So in theory, you could sell your house for $600,000. You've got $400,000 cash, but then you have to go buy an inflated home that's also very expensive, and you have to then buy it at a 6% mortgage when you're walking away from a 3% mortgage. Doesn't make any sense. So the math does not work for selling homes. There's no incentive to leave the home that you have. And people can't refinance and this and that. So there's a lot of stuff going on. But the main thing that's happening is that people who have a mortgage, since the Fed kept the rates low for so long, artificially, those rates are not replicable. So that means anybody who goes to get a rate today in the real world is finding out that that mortgage that they had, you know, for I think we've done this before, but I mean it's an important concept. Mortgage calculator. Okay. So remember, so let's say that you originally bought a house. It was $400,000. You put $80,000 down. Whoops. and you have $320,000 mortgage, okay? 30-year fixed, not 7% though, it was 3%. Whoa. Let me do it, 305. So $320,000 loan at 3% is only $1,300 a month. Let's write that down. That's your monthly payment on a $320,000 loan. So now you still pay $1,358 a month, but you own $400,000 worth of your home. You basically, wait, no, you still have you still have $200,000 remaining on your loan. I'm sorry, but you're not paying that. You're still paying your 13 blah blah a month, right? You're still paying $1,350 a month, but your home is now worth $600,000, and you've built up $200,000 in equity. That's my supposition. Okay, so after 10 or 15 years, you're now at that point. So you've got a couple of $100,000 in equity in the home. It's worth $6,000, and that means if you sell it, you're going to net $400,000, right? So then you go to buy you wouldn't probably buy a $600,000 home. You probably don't want to buy a $700,000 home, right? But so what? You buy a $700,000 home. You put all the money, all the $400,000 you netted out of the previous home, you put it in, and now you have a $300,000 mortgage. But it's not at 3.5%. Now it's at 6%. Oh, that should be a 0. And now it's $1,800 a month, right? Remember, it's $1,350. Now it's $1,800. So it's costing you $500 a month more to move to a $100,000 more place. Now, let's say it was even the same price as the house that you're selling. That's $1,206. You're not saving anything. And you got moving costs and this and that. There's no good reason to do it. That's the problem. There's no benefit. You're not changing your lifestyle. You're not improving things. So if you want to move to the same price house, you're probably, and of course that's somebody who's paid off half their mortgage already. But if you've paid off half your mortgage, and if you want to just move to another place or whatever, if you go for the same amount of money, you're probably going to be pretty freaking disappointed in what you get almost anywhere you go. But if you want a better house, which is the main reason people move, then you're going to be way out of pocket. It's going to cost you quite a lot of money every month to have a better house. So many people are making the decision, I'm just going to keep what I got. And that's bad for realtors, it's bad for mortgage brokers, it's bad for builders, it's bad for everybody. So that's one thing. And so it says that there, many are ready to move, but don't want to lose the low rate mortgages they locked in a few years ago, and that means there's no supply. Bonds backed by apartments. Holy crap. How could you be holding a bond backed by apartment and not have sold it by now? Holy cow. This is a horrible idea. I love the Wall Street Journal. The deep state is all too real. That's irresponsible news. I know it's an opinion, but when you feature an opinion, yeah, you know, editorial opinion is fine, but it shouldn't be headlined on the front page with everything else. That's exactly, it's not really an editorial. It's not really an opinion at that point. It's your editorial decision to feature those headlines. As I said before, complacency. I don't like it when Rupert Murdoch agrees with me, but complacency, this is what the problem is. We're accepting this stuff. Inflation eased in April, but remains high. That's the most important thing. Can inflation fall fast enough for the Fed? Why the April inflation report reinforces the Fed's plans to pause. I don't agree with that. Santos finally got what's coming to him. Icon under federal investigation. Trump's lost. Icon's going to sue the crap out of this guy if he doesn't have the right information. Can you imagine? And we got that debt ceiling thing. That's another fun thing to worry about. Anyway, so no, I don't see anything particularly happen at 1:30. Did you guys see anything? What made that happen? That's kind of some crazy action there. But the whole day is crazy action, right? And by the way, when I look at the SPY volume, all I do is go to Yahoo and I put in SPY, and usually it responds. What's going on here? There it goes. And then I go to historical data, and it tells me the volume. See? So today already we're passing yesterday and the day before. But that's what we knew was going to happen, right? We expected that. The question is, where are we going to end up settling, and how's that going to put us for the week? So at the moment, we started here. Well, actually, this is, whatever this was Friday. So we were here, and now we're here. So we're going nowhere. Nowhere is fine. Nothing wrong with long consolidation. We've been consolidating since the beginning of April over here. A little up and down action, but basically we just keep trailing along, and we'll see how that goes. So what else have we been looking at? Oh, and I got Shellbot's been making picks for me, and we asked him, given the earnings, I asked him what was most likely to be the misses and beats for the week, and he's doing a pretty good job picking them out. How did I give him all the data? Oh no. The 5 companies most likely to miss earnings this week. And he said, how did I get him to read that data though? That's the thing. I gotta remember that for next time. He gave us some nice information. I gotta write these things down. I'm so proud of myself. I forgot to now I'm mad at myself. Okay, so because we started out looking at Berkshire Hathaway, economic, blah, blah, blah. Here. All right. I asked him what 5 companies are most likely to miss this week. And he said, and these were nice little summaries. He said, Lucid Motors, they report on Monday. Analysts expect the company to report a loss of 28. The company has not delivered any vehicles yet and is facing production delays and supply chain challenges due to the pandemic. I don't like when he says due to the pandemic. It always makes me nervous. So what was his source? May 12th. How could it be May 12th? Oh, most anticipated earnings May 8th to May 12th. Okay, accept that. So, that's where he'd figured it out from. So he looked at these things. I see. So he wasn't looking at every earnings report. He was looking at the top companies that this guy had decided, and that's how. So he was picking from a more limited field than we thought. He didn't look at all the earnings of all the companies. He looked at somebody else's top picks or most notable earnings, and then he went from there. But either way, these are good choices. There's no evidence here at all, though. Oh, I'm sorry, I closed it too soon. There is no evidence at all that this guy, or if you click on each one, can you open up each one? Waiting for securities, bloop, 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 bloop. So what, wait, who's the one we're talking about now? Was Airbnb? No, that wasn't his first one. It was Lucid LCID. Okay, so where does that come out? There it is. So if I click on LCID, what do I see? Lucid Group stock forecast and price. Oh, ad block. Son of a bitch. Incognito window. See if that works. All right, so Lucid 856. Not really. Earnings forecast. Next quarter earnings is for 038. Next quarter's earnings forecast for the range of 46. The previous EPS was 043. They beat the earnings time, 12 months, blah, blah, blah. All right, well, that's his job, though. You don't fault him for doing his job. I mean, he read everything, and he found he made that decision. All right, that's reasonable. Company also faces competition from Tesla. So what do we know? So he's calling attention. This is the point, though. He's calling attention to stocks that may be over or underpriced. And so he said, these are ones that would fall this week, I believe that we were talking about, right? I said, what are good shorts for the week? Because I was feeling bearish that morning. Most likely, so stocks most likely to miss is what I said. So he said Lucid, and the reason he said Lucid is because, and he's right. They haven't done anything. They haven't delivered anything. They've got no revenues. It has to be a little disappointing. They're running, the money is pouring out and nothing is happening. They're not delivering a vehicle, not even a few. Now, the problem is with any of these car companies, you don't have a lot of Elon Musks who are going to shove, semi-built cars out the door with all sorts of safety issues and say, well, let's see what happens. That's not the way you should do it. It's not the way a moral person would run a car company. But he got away with it, and he got very lucky. But not many people are willing to do what he did to get a car to just show revenues. And so these guys are saying it's not right yet, so we're not going to put it out yet. We're not going to sell it to anyone yet. That's not going to please your shareholders. At the same time, Musk is purposely putting pressure on these guys and making it look like their margins are going to get squeezed out. And what the hell is anybody investing in these companies for anyway? They're just going to end up being a regular auto company that has no margin. That's a problem too. So company missed earnings expectations, and they provide weak outlook for the rest of the year. So that was the writing on the wall there. But it turns out investors are pretty forgiving for what they reported. Airbnb, and he was right that they did drop considerably, although again, he did say that they would miss, but they didn't miss. They actually had pretty good earnings. But it wasn't good enough, so they dropped. So I'm going to, you have to give them that one. And TDD, no, that's latest today. And Robinhood is latest today, and Uber is tomorrow. So there you go. So for those, he's there. Very interesting though, right? I mean, he pulls these things up, he has reasons, and it's, that's the thing, is as long as you understand that the only thing that you should be doing with that is having your attention drawn to those stocks and think about it and contemplate it yourself and decide, do I agree with this and do I want to short this stock or go long on the stock I later estimate about 5 to go long on too. So it could have been that hard. I hope I can still remember how to get that out of him next time. I hadn't expected to be a robo-psychologist for my side job as I turned 60 years old. That's not what I thought was going to happen to me. But it is fun. It's a very, very fun, challenging, interesting thing to do. All right, so anybody got any questions? We'll be wrapping it up shortly. I don't see any. All right, so anyway, so good way to get trading ideas. Really great way for me to get reports now. That's the key. So this is still beyond. I mean, it's unbelievable. It's like a huge research report I get out of this guy. Stuff that I would have to look for ages. Targeted banks, bank listed by 6-month beta Roughly banks over beta 1 being targeted. Interesting. That's a lot. Wow. Well, we know the PacWest and Western Alliance are basically the next ones on the chopping block. Alley, Silvergate, Key Corp, I'm concerned about. Comerica is also having problems for sure. SoFi, I totally disagree. I don't think that I think they're being miscategorized here, but we will see. New York Community Bank, no, absolutely not. That's incorrect. Capital One, I don't think they're in trouble. Ozark USB, I don't think so. Discovery is a credit card company, not a bank. UBS, of course, just swallowed Credit Suisse, so they've got trouble. They've got indigestion trouble. PNC, Citigroup, I hope not. Morgan Stanley, I hope not. American Express, also not a bank. Deutsche Bank is Deutsche Bank. I can't believe they can go down with Credit Suisse. Bank of America. I mean, look, this is crazy. If these guys fail, just I don't have any advice to you other than like like get a boat and get out. That's all going to become very scary if all those guys fail. So here we talked about Airbnb, and we decided that they're not so bad, but we're not. It's again, it's not compelling to jump right back in. Oh, hey, maybe Seeking Alpha knows what's happening. Let's see. Seeking Alpha news. Hide full stories. That's a good idea. Hide full stories. Now it's good. Government records surplus, less than expect. Oh, records a surplus. How much less is that? Oh, because it's tax time. They're supposed to be collecting this money. That's right. Consensus 410, and they got 176. That's pretty bad. So it's half of last year, way less than half of what they expected. We have up to date, we have a 9.25 deficit, up from 360 that we had last year. Government's fiscal year ends September 30th, so we don't have a lot of time to save it either. 639 receipts and outlays, but that's April. You're supposed to have a surplus in April. That's when we collect all the money, and May. So April and May, you collect all the money. After that, you're chasing after late people. That's not it though. 130 is what we're looking for, right? Laxness, Life Science, Icon. It's actually pretty bad, right? Minus 75. Citigroup, Phillips shareholders on the board. No care. Don't care, don't care, don't care, don't care, don't care. We still believe there's a Fed pivot. Give me a break. See, this is the idiocy. They're going to pivot. They're going to reverse themselves and go the other way and start lowering rates because everything is awesome. That's so ridiculous. Compass stock surges. Don't care. What the hell? CELH. 22%. Wow. Zscaler. Oh, that's ZS. We're just looking at them on the watch list. S&P extends losses, NASDAQ pairs gains, initial CPI boost loses steam. And again, like it was so obvious in the morning that it was wrong, that the reaction to it was wrong. And that's the problem with algo trading, though. Algo trading reacts to the one headline and doesn't make the next move and the next move and the next move. It doesn't see down the board. And that's why it loses. And you cannot instruct ChatGPT, and you cannot instruct Bing to go that deep, because that level of instruction just puts them into a loop where they can't figure anything out and they just start like melting down. Microsoft skip raises for full-time employees, cut bonuses, boo. Car Gurus rallies, that's weird. Nope, I don't see any actual reason for what's happening as far as the moves in the market. That's a shame. Look at this. GM self-driving subsidiary expands robo-taxi service in Texas. You know, it's funny because, you know, we have such a large country, like something can be happening in Texas and we have no idea what's going on. Roblox still amazes me that does so well. Microsoft signs deal with nuclear fusion company to provide electricity. Okay, I gotta see what that says. What is that? Helion. The plant will come online 2028. 5 years. 50 megawatts. Wow. That's basically a small city. Wow. Or a large town. Guess you can look at it that way. Wow, you hope it's true. That's so many of our problems get solved if we can actually figure that out. So thanks Microsoft. Nice enough to put some money up and see if we can get it to work. No, I'm not seeing it. I'm sorry. I don't see anything that would really cause these moves. They're just random bullshit. So not much we can do about that. But again, see, I see stuff like that. So the combination of all these stocks that we like are still super cheap, and the market is insane, and we don't know if the banking thing is fixed. We don't know if inflation is fixed. We're not sure what the Fed is going to do, and God knows what's going on in the Ukraine at this point. That's another thing. And what was that other thing that was important? The debt ceiling. I knew there was something else. And the debt ceiling and the oceans are boiling. We all know about that, right? I think I've posted enough news articles about that. This is not even something they were worried about, you know. This was not a thing that was on the radar. The oceans are warming at an alarming rate, like belly up fish kind of rate. And then what? What is our plan? Like if we kill all the fish, what's our plan? Not to mention oxygen depletion and all kinds of other things that could happen. But just the fact that we no longer have fish to eat should be something that we worry about a little bit. Just minor concern. Not that it matters, because if we didn't do that, we were going to fish out. We were already overfishing the oceans to death anyway. But this is like, now we're overfishing the oceans and we're killing the fish that got away. We're not gonna, none of them are going to survive, no matter what. If they're fast and they get away from the boats, we're going to just boil them. We'll just cook them right inside the ocean. Very bad, folks. But anyway, so these reasons are why I am not jumping back into the portfolios. And it's if I feel that we're really breaking out and doing something, then yeah, but we can't sustain 4160. That's a bounce line that we were looking for. We're not even getting back to that. The Russell's not even getting back to 1800. That's a problem. We got to see some progress in these indexes. They got to build something up. And obviously they're not, because we've got a list of the best stocks to buy. That's what the watch list is. These are the best stocks to buy, and they're not doing particularly well. Not necessarily, not because they had terrible earnings or anything like that, but just the market is not particularly interested in picking up value stocks at the moment. So the gains that you're seeing are being supported by a very, very narrow group of stocks that are supporting the whole index. Stocks like Apple, which is back at 173. So, you know, Apple went from 120 in January. So for the year, Apple's from What's that? 125. Went from 125 to 172. So basically $50. $50 is $50 on Apple is 50 times 8.5 is 4 something, 425. 50 times 8.5, 425. So 425 Dow points. What? There it is. Okay. No, because it's 1/10. So the Dow since January has been flat. That is not even, it's annoying me. I don't want to see the Dow by 10th. Dow Jones. Oh, INDU. There we go. So here's January 1st. So basically here, so we're only up about 200 points. So of the 200 points the Dow has gained for the year, 425 came from Apple. So the rest of the Dow lost 225 points. It doesn't fill me with enthusiasm to jump in, right? And the same is on the NASDAQ. The Dow's carrying the NASDAQ. The Dow is carrying the S&P. Nobody's doing well. Not the Dow is carrying, sorry, Apple, you know what I mean. There's not some broad-based rally, and we're not missing anything. What there is a very tall house of cards is being built. And so far, nobody's completely knocked it down yet. And they keep adding cards to the top. But when it collapses, and again, we think it's going to collapse. We think the S&P will pull back to about, where's my, there you go. How nice. Okay. So recall that. So the S&P, here's the range for the S&P. We think we're just going to go back to here. Not a huge thing. So we think we're going to go back from 4160, which is a weak bounce, to the week retrace back around 3850. Well, it's actually 3840. Okay. I don't even think we're going to get to a strong retrace. I think we're going to check the bottom of this channel again. But when we do that, I'm going to be real enthusiastic about buying by comparison. And that is almost a 10% correction. So I expect a 10% correction. Very surprised if we get to a 20% correction. Things aren't that terrible, but things are not that good that we should be higher. Things are not that good that we should be going up 10% from here. That's not likely at all. All right, so that's where we are at the moment. And I'm sorry if it's boring. I know it's been like kind of dull as far as, you know, we're not doing a lot of stuff. We're just talking about things. But please, if you're interested in stocks, let's just talk about them. Let's, you know, ask in chat and we will discuss. We will look at the stocks. It's very easy now for me to run a pretty good analysis on these stocks. So we can practice with the robots. We can take a look at things and see if they're worth buying. I'll put up a trade. Just because it doesn't go in a portfolio doesn't mean I can't put trades together. So we'll take a look and see what we find. And there's plenty of things that can be played, but I don't see the hurry. It's a long, long life, guys. It's a very, very long life. And in 4 years, we did incredible things with the last batch of portfolios, and we're starting again now. But you know what? 4 years ago, we were very cautious too. And you know why? Because we started in November, and we started, same exact thing happened. I cashed out in November. We were at some crazy high at the time. We had more than doubled our portfolios, and that's all we usually go for. I'm very, very happy when we double up. I think we quadrupled. I think we were getting around 400%. Yeah, it was, you know, there were two Dr. Evils. So there was $2 million and we started with 500,000 in the LTP, but we had 2 million in the LTP. So there were two Dr. Evils. And I was like, that's it, that's too much. But then the next set of portfolios, it said, okay, now we're going to purposely go into it looking to build a foundation that we're going to keep longer than our normal cash out period. And we did. And we had incredibly great results. But that's because these things gather over time. But they gather over time because initially we make sure we build a very, very strong foundation and we don't lose the money early on so that we're playing catch up. And that's where we're at now. So that's what we're trying to accomplish. We are going to pick the right stocks to start our portfolios with. We're going to pick the right time to start our portfolios with, and we'll build a strong foundation so that we're going to get to that double up point very quickly. And once we hit the double up point, as we just went through in the last cycle, it gets much more exciting because then we got money to play with. I intend to make 30 to 40% a year. That's my goal. So if I make 100% in a year, I've got 50%, I've got the extra 50% to play with. And then we can get aggressive with the 50%. And if we're successful being aggressive with the 50%, suddenly it goes from 50 to 100, plus the other stuff I have goes back to 100. Now we're up to 100%. That's what happens if things go well. But all that starts with getting in at the right time and picking the right spot. And that all starts with information. So we've got to find out first what the hell is happening, why it's happening, and what the macros are going to be. Will we have a debt ceiling crisis? Will we not have a debt ceiling crisis? Will Russia keep firebombing the Ukraine? Which, have you seen these videos? They are firebombing cities in Ukraine, dropping bombs that spread out and burst into flames on the contact with the buildings. The idea is just burn the cities to the ground. And if they didn't have their anti-missile defenses, it would be burned to the ground. But fortunately, fortunately, it's a small percentage go through, but it's still hard when it hits. They're horrifying. And again, it's the same bullshit. Nobody does anything about it. But whatever. All right, that's not going to be our job. Thank God. Thank God we don't have to go to this war. But at least we could send some stuff, If we're not going to fight, at least we can go send some stuff for them to fight. Anywho. All right, so that's where we are. And next week is the expirations week. We have nothing to worry about because we don't have any portfolios to review. So next week's expiration week. My intent was after next week that we would start, building up the new portfolios, but we may have to wait until the debt ceiling is resolved, and that's going to be over here. And again, resolved or not resolved, but if it's not resolved, thank God we got cash. If it is resolved, then we should probably see the markets forming a base that we can start moving back off of. But I'd say during this week for sure, in the next 2 weeks, in fact, let's start picking things and deciding who our leading candidates are going to be to put in the new portfolios. Let's start picking out stocks and thinking about who really do we feel is really bulletproof down at these levels and should become part of the portfolios. All right, so I think that's going to be my strategy for the next 2 weeks is let's make a lineup, basically, right? For each portfolio, let's make a lineup and let's watch them carefully to make sure we know what we're doing. So that's my plan. Let me know if your plan deviates and we'll do it again next week. Okay, thanks very much.